Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, US Federal Reserve Jerome Powell's hawkish tone delivered a stark message to the market after the event on Friday at the Jackson Hole Symposium, Wyoming. The Friday rollercoaster ride for the Australian dollar and for the rest of the markets came through as the US dollar surges to close to 109. From there, the market is actually looking for a little bit more bearish outcome for the Australian dollar and also for some of the other markets as we go through it one by one. And we can see now the Australian dollar is challenging the level of 68.60. In light of the heavy technicals and the strength of the US dollar has put a very much bearish tone for the Australian dollar. Along with that, with the engulfing candle and a break of 68.60 would confirm a move down to 67.90 and maybe down to the region that we can see here back in July, which is around 68 figure 90, and reassess. The Euro's whipsaw price action ends in a negative bias on Friday after US Federal Chairman Jerome Powell's hawkish tone did deliver somewhat a crushing blow for the investors, has hopes that it may ease up on high interest rates after the US Central Bank signaled it would keep hiking interest rates until inflation was under control. Powell also warned that investors during the speech that the central bank's actions to bring down inflation will come with some pain to households and also businesses. At the present, the US inflation eased back in July at 8.5%, but still remains at a 4-decade high. As you can see here, the market is still a little bit nervous, and it will be this week because all eyes look to the US inflation data and also August US job report or the non-farm payrolls. So we're still on this roller coaster ride and may continue. In light of the pattern, we could see the euro drop a little bit lower to the region of around 98.35 and the base now seen at 96.5. Along with that, there's also talk that some of the European central bank policymakers want to discuss a 75 basis point interest rate hike at its September 8th policy meeting, even if it does conclude to a recession, as that also looms. The dollar yen has broken above that level of 137.5 and now puts further scope to the upside and looks towards 138.80 to 139.50. And reassess from there, as we could get a rejection like we saw previously in early July, and if so, expect to see a pullback. With that being said though, the market can ease lower to 136.80, but I feel the bulls are still likely to be lurking from around this region and reassess from there in case we do get a break. But at the moment, all eyes still remain to that top side as the rejection from that midway point on the RSI and also married up to a stronger MACD has supported the rise. Sterling posted an engulfing candle and now looks further to the downside. As we can see here, the market's tumbling towards 116.65. In light of the pattern, could easily see a further fall to 115.5, but no doubt this roller coaster ride and the engulfing candle has put the bears on a mission that could see the downside challenge. Looking at gold, well, the market's crushed that level of 1,732 and still remains weak as it now reaches close to its objective of 1,722 to 24. In light of the pattern, we could see a heavy fall and stops could be triggered and see a fall towards 1,680 as a potential target. Wrapping up with oil, as you can see, the market's a little bit firmer on the start of this week and no doubt looking towards that resistance of $96 a barrel that was recently rejected. Reassess from there in case we get a break that could see us up towards 98. But in the meantime, first of all, let's see how the challenge upon 96 turns out. Well, that wraps it for the start of the week. Thank you very much for joining me. And as always, look out for the intraday report and I hope you enjoy the rest of the day.